If you've ever built an algorithmic trading strategy, you know this feeling all too well. You run a backtest, and that equity curve, oh, it's a thing of beauty. Just a perfect, smooth line rocketing to the moon. But then you go live, and reality hits like a ton of bricks. So the million-dollar question is, how do you bridge that painful gap between a promising backtest and a strategy that actually makes money in the real world? Well, that's what we're going to dive into today. How to stop hoping for the best and start engineering your success.
You know, this quote just nails it. We're so often trained to hunt for some kind of golden signal, right? A secret entry that nobody else knows about. But real long-term success, it's not about finding a secret. It's about building and managing a reliable process. It's about being an engineer, not a treasure hunter. And this is the question that keeps so many of us up at night. You put in all the work, you're sure you found a real edge, but the second real money is on the line, the whole thing just seems to fall apart. What is going on here? Well, here they are. These are the usual suspects, the monsters hiding under the bed of live trading. You've got overfitting, which is where your strategy has basically just memorized the past instead of learning from it. You've got ignoring real-world costs like slippage and fees that just eat you alive. And maybe the biggest one of all, our own emotions, where we panic and start messing with the system based on fear instead of data. And this slide just captures that disconnect perfectly. Over on the left, that's the dream, right? That flawless backtest. And on the right, well, that's reality. It's messy, it's unpredictable, and it's full of those hidden costs. Our goal isn't to pretend that reality on the right doesn't exist. It's to build a system that's tough enough to survive it. So how do we actually do that? It all starts with a huge shift in our mindset. We have to stop being signal hunters, frantically looking for the next magic indicator. Instead, we need to start becoming process engineers, people who systematically build something that's strong, reliable, and truly robust. And our main tool for this engineering job is something called DMAIC. Now, this is a battle-tested framework that actually comes from the world of high-precision manufacturing, from a methodology called Six Sigma. Its entire purpose is to use data to improve processes, cut down on errors, and create consistent, high-quality results. The only difference is, instead of making a car part, our product is a profitable trade. This right here is the core philosophy. When you start seeing your trading strategy not as a magic box, but as a process that you can systematically improve, it puts you back in the driver's seat. You move from just passively hoping for the best to actively controlling your destiny. Okay, so let's walk through this 5-step framework. I want you to think of this as your roadmap, your guide, on this quest to build a trading system that can actually stand the test of time. So, the 5 phases are define, measure, analyze, improve, and control. And the most important thing to see here is that it's a cycle. This isn't something you just do once and then you're done. No, this is a continuous loop of refinement and improvement. Let's break each of these down. All right, step 1, define. Before we do anything, we have to know what we're aiming for. And I mean, we have to get really specific. It's not enough to say, I want to make money. It has to be, my goal is to achieve a 15% annual return with a maximum drawdown of less than 12%. Having clear, quantifiable goals is the bedrock of this whole thing. Next up, we measure. And this phase is all about the data. We have to get our hands on clean historical data for the market we're trading, and we need to measure its personality. What's the typical daily volatility? Are there any weird gaps or crazy outliers in our data? You have to understand the environment your strategy is going to be living in before you can build it. Okay, now for the really fun part. Analyze. This is where we get to put on our detective hats. We use actual statistical tests to figure out if our trading ideas have any real merit. So that moving average crossover you found, is it a genuine, repeatable signal? Or was it just random luck that happened to look good in your backtest? This phase is all about separating the real signal from the random noise. So once we've found a real signal, then we can move on to improve. And I want you to notice something here. This is not about tweaking your settings for months on end just to get the prettiest backtest. No, it's about systematic optimization, and this is absolutely crucial, rigorous robustness testing. We're not just trying to make it profitable, we're trying to make it unbreakable. And finally, we have control. This is what you do after you go live. So you don't just launch the strategy and then walk away hoping for the best. You actively monitor its performance, using tools like control charts to make sure it's behaving the way it's supposed to. And if it starts to drift off course, Well, the control plan tells you it's time to reevaluate, which brings you right back to the start of the DMAIC cycle. Okay, so that's all the theory, but what does this actually look like in the real world? Let's quickly walk through a case study for a simple trend-following strategy on the Euro-USD hourly chart.
So this table pretty much sums up the whole journey. You can see the super clear goal we set in the define phase, but look at the analyze phase. That was the game changer. The key discovery was that the strategy's success really depended on medium to high volatility. Just knowing that one thing allowed us to filter out bad trades and manage our expectations, which led directly to that fantastic result in the control phase, where the live drawdown was kept under 10%.
And here's the bottom line. After all of that rigorous work, the strategy achieved a solid average profit factor of 1.7. Now, that number didn't come from a lucky guess or a perfect backtest. It was the direct result of a disciplined process. And a profit factor that solid, after all that stress testing, gives you a level of confidence you just can't get any other way. And how exactly was that confidence built? It was through these kinds of tests during the improve phase. We're talking a walk-forward matrix, which basically chops your data into different time periods to make sure the strategy can adapt. Then you run Monte Carlo simulations, where you literally shuffle the order of your trades around to prove your success wasn't just because of a few lucky winners. It's all about battle-hardening your strategy for the real world. So, what's the path forward for you? It really is about shifting your perspective, from chasing luck to building a process. That's how you get to a more robust and reliable way of trading. At the end of the day, becoming a consistently profitable algorithmic trader is a marathon, not a sprint. There are no magic shortcuts, I promise, but by adopting a systematic, data-driven process like DMAIC, you can build yourself a massive advantage. Because discipline, based on hard evidence, will always win out over emotional, impulsive decisions in the long run. So I'll just leave you with this one question. Are you going to keep hunting for that one magic signal that promises to solve all your problems? Or are you ready to pick up the tools, roll up your sleeves, and start engineering your own success, one systematic step at a time? The choice is yours.